So, as somebody who has been involved with the digital dollar project, spearheading it, if you will, as you know, this sort of business, the lending business, relies a lot on stable coins. So what happens in a world where a digital dollar does become possible, where, let's say, the United States government does get involved with issuing, or the Federal Reserve gets involved in issuing a digital dollar? What happens then, do you think, in the crypto lending sphere? Does such
No, it's such an interesting question. Actually, it's a big question in the area of central bank digital currency being asked not just here in the United States, but around the world. We're 105 countries now, almost 95% of the world's GDP are actively engaged in looking at central bank digital currency, and over 50 of them are in advanced development. And as you know, over 10 countries have now launched central bank digital currency, including China, which has placed it in 250 million digital wallets held by Chinese citizens. So central bank digital currency is developing rapidly. And one of the big questions is, what happens in a run on the bank situation? Would a digital dollar be more quickly withdrawn from bank accounts in a run? Or, as we at the Digital Dollar Project has posed as a question, could the opposite be true? Could people actually be more reluctant to withdraw their money, or less ready to withdraw their money, if they know they can move it in and out of a bank account at the swipe of a mobile device screen, as opposed to running down to a branch bank and standing online or in front of an ATM machine? And so whether central bank digital currency is actually what effect that would have on traditional run on the bank situation, whether it would be a net positive or a net negative, is one of the reasons we at the Digital Dollar Project are actively engaged in pilot testing a U.S. central bank digital currency, because we want to get some empirical data so that policymakers can make decisions about deployment of central bank digital currency, whether a digital dollar or a digital euro, based upon real world experience. And that's one of the areas that we intend to pilot.
Do you have a sense of the success of China's CBDC, the ECNY, and how that will impact the development in Europe and with the U.S. digital dollar?
Yeah, well, look, China, as I said, has already put their digital yuan into 250 million wallets. Now, the amount in those wallets is, by what we can read and understand, is relatively small. So I would call what China's doing is a very large pilot project, but still very much in the pilot stage. There's a lot more to go. But believe it or not, there's features in the Chinese digital yuan that's quite advanced. I mean, it's programmable, it's networkable into all kinds of devices, from mobile phones to smaller, mobile wristwatches, as well as networked into their broader commercial activity, into the broader economy. It's quite sophisticated. And it's also sophisticated in another area that we in Western free societies might not like, in terms of its ability to perform surveillance and censorship of the activities of Chinese citizens. But that's actually an attribute that a lot of countries around the world that don't have free societies would actually like to have and would like to import. You could envision a world 10 years from now where a third of the globe is actually using either the digital yuan, because they're engaged with China in its Belt and Road Initiative and are required to use digital yuan, or their ECNY, as they call it, or the many authoritarian regimes around the world that would like that surveillance capability, would like that censorship capability, and would like that ability to move on rails outside of the Western-dominated banking system. So while China's current stage at 250 million wallets may be seen as the world's largest pilot project, within 10 years, you could see Chinese CBDC technology and infrastructure in place in as much as a third of the globe. And I think that is truly something that the United States and Europe and Britain and the free economies, the free societies, need to take notice of.
So bring it back to lending. You were on the board very briefly of BlockFi, and they, of course, got bailed out by FTX and Alameda. Sam Bankman-Fried essentially bailed them out. What do you think that perhaps that the whole stablecoin structure, or at least the current market structure that we see in crypto, is not quite ready for a proper lending market, if you will? Is it still still too early in terms of liquidity and in terms of stability for the lending market in crypto, that we now saw these bailouts, including the likes of BlockFi, et cetera, to try and just stay steady in business in light of a massive downturn in crypto?
I think you've put your finger on something, Lawrence. There is I think we came this year to a situation where the promise got ahead of the reality. And while the run on the bank situation we've seen in the last few weeks reminds some people of 2008, which I lived through and knew very well. In fact, it reminds me of another market dynamic that I also lived through and know very well, and that is the 2000 dot-com bust. You know, when pets.com failed in 2000, it wasn't because people didn't want to buy pet supplies online. It wasn't because the promise of e-commerce wasn't realistic. It was because the reality of e-commerce wasn't practical. It's not that people didn't want to buy pet supplies online. It's they didn't want to do it using dial-up modems. They didn't want to do it and wait 3 weeks for the package to arrive in the U.S. Postal Service. You know, it's only because we've gone to much more sophisticated technology, 5G and other technology. It's only because the logistics situation is such that those pet supplies can arrive the afternoon of the morning you place the order, that e-commerce has really become a reality. But what had happened was the promise of e-commerce and the valuations associated with it had gotten way ahead of the practical reality. And I think that's a lot of what we've seen in the last few months, the valuation and the promise, and also combine that with the changing of the credit cycle. I mean, the macro environment of moving away from low interest rates, cheap money, to rising inflation, rising interest rates, and a deliberate attempt to stall the economy in order to drive down inflation. We're going into a new credit cycle, so all valuations are down. And let's put it this way. Tesla is not down 70% because the future of automobiles is not going to be electric. It is still going to be electric. The valuation had gotten ahead of the reality as we go into a new credit cycle. And the same is happening with crypto. We've had to reprice it because the future is a little further out on the curve than we had anticipated it to be. But it doesn't mean that the future of finance and banking and money itself is not going to be one of digital tokens and digital assets. It is, but the valuation had gotten ahead, the infrastructure had not kept up, and we've seen this most recently in some of these things we're talking about.